Welcome to our today's discussion. Today we are going to discuss more about trading account. We need to understand the format of trading account, how to do the trading account, and the uses of the trading account. To start, trading account is a statement which is prepared to determine the gross profit or the gross loss. A trading account is therefore an account prepared at the end of the trading period in which the gross profit or the gross loss is determined. Like other accounts, trading account has a title, and in the title, the name of the business is included, it is captured, followed by the account, trading account, and finally, the date at which the period ended. For instance, if you check there on the other side, on the right side, we have a business by the name KK Traders. So if you are asked to do a trading account for KK Traders, then you'll start with the name of the business, KK Traders, trading account for the period ended 31st July 2023. Now, that period will be stated in the question. They will tell you that required to prepare a trading account for the period ended at a given date. Now, in this case, for instance, we said maybe the trading period ended 31st July 2023. Now, all that is included in the trading account, the title of the trading account. Again, the sales are recorded on the credit side, while the cost of sales is recorded on the debit side. The difference between the credit side, that is the net sales, and the debit side, that is the cost of sales, gives the gross profit or the gross loss, depending on which side overweighs the other one. We know well that for us to get the gross profit, it is the net sales which must exceed the cost of sales. But a case where the cost of sales exceeds the net sales, then the business is likely to realize a gross loss at the end of the period. Before we look at the format and drawing of the trading account, it is good to know how to treat some items. For instance, returns inwards. Returns inwards are also called sales returns. And which are they? These are goods which were once sold to the customers, but they have been returned back to the business because of various reasons. And now what do? We subtract them from the total sales because they are no longer part of sales. They are in the business. They had been returned. So we subtract them to get the net sales. Now we have returns outwards, also called the purchases returns. It is subtracted from the purchases. And why is it subtracted? Business might also have the suppliers, the creditors. Sometimes the suppliers might have supplied a wrong commodity, a wrong product, and therefore this product should be returned back to the supplier. So once you return them, the amount you purchased reduces. That is why we are subtracting it. We also have the carriage inwards, which is not there, but it must be handled well. Carriage inwards. It is also called the carriage on purchases. How do we treat it? Carriage on purchases is the amount the business incurred when transporting goods to the customer's premises, and therefore we add it. Maybe you bought goods, the business bought goods, and you've carried them. you must include it in your purchases. So we add carriage inwards to purchase. In other words, it is a special purchase. For instance, if you are operating a business, you bought goods from town A, and you used, for example, 10,000 to transport them to your location, the business location, town B. The 10,000 you use in transport will form part of the purchases, because when you will be determining your gross profit, you must factor in this amount. That is why we are adding carriage inwards to purchases. Now, we have some key formulas to remember when drawing the trading account. The first one, we have the cost of sales. The cost of sales gives us is given by the opening stock plus purchases plus carriage inwards, or carriage on purchases minus purchases returns minus closing stock. Now, the bracketed part gives us the net sales. You will find that some books will give the cost of sales as cost of sales is given by, could also be given by the opening stock plus the net purchases less the closing stock. Now, this net purchases is what is bracketed here. So if you want to get the net purchases, it is simply the purchases plus the carriage inwards minus purchases returns minus the closing stock. You'll have the net purchases. And all these are recorded on the debit side of the account. Just as we said that on the debit side, we have the cost of sales. Now on the cost of sales, we'll start with the opening stock, then we add purchases, we add carriage inwards, we subtract purchases returns, and we finally subtract the closing stock when given. A case where carriage inwards is not provided in the statement or in the information or in the data, we are not going to provide for it. We are going to assume that there was no carriage inwards. If there was no purchases returns, we are going to assume we will not provide for it. But I want you to know that the opening stock, purchases, and the closing stock are key elements there. Under normal circumstances, you will find they are provided. Now, let's move on to the next bullet. Net sales. Net sales is given by the sales minus the sales returns. Sales returns is also called the return inwards, as we mentioned earlier. Now, when you subtract that, you get the difference, you'll get the net sales. All these are recorded on the credit side of the account. And from here, now you will see that on the debit side, we have the cost of sales. On the credit side, we have the net sales, and therefore we weigh the difference. And that difference, the balancing figure, will give us either the gross profit or the gross loss. The format of the trading account. Now, it is good to know how to do the trading account. So the first thing we begin with is the name of the business. Name of the business. You have name of the business. It comes first. Then which account are we preparing? We name it trading account. Trading account. Then when did the period end? For the period ended 31st or maybe July 2023. All these form parts of the title. Then you underline that. Then it is an account. It must have the T-shape. So we come on the debit side. We'll have the cost of sales. This is the debit side. Then on the credit side, we'll have the net sales. So starting with the debit side, we have the opening stock. Opening stock. How much is the opening stock? You add it there. Then we add purchases. Add purchases. How much is the purchases there? Then less purchases returns. Purchases returns. How much is the purchases returns? It could be that amount. Then we can close into bracket because we are subtracting. Then we can also add the carriage inwards. Carriage inwards. How much is the carriage inwards? A given amount there. Then we less the closing stock. The closing stock. How much is the closing stock? We're subtracting that. Now, you'll note that there are these items which we have included in the bracket. We are subtracting them so that you may know the ones which are included in the bracket, we are subtracting them, and we have used the terms here: less, add, less. So you take your calculator, you feed all the figures there, then you'll get your figure down there, and therefore this is the cost of sales. The cost of sales. The cost of sales is given by this. That's the cost of sales. We come on the credit side, we'll have the sales. The credit side is given also in shillings. We have the sales. How much is the sales? It is that amount. We have less sales returns. Sales returns. How much is the sales returns? That amount there. Then when we subtract that, we'll get some figure there. Now you have to weigh which side is bigger than the other one. Under normal circumstances, you'll find that the net sales exceeds the cost of sales. So let's say the total here, the account must be balanced, and we are going to use the highest figure. That is the one which it will balance with, and therefore you'll realize that the cost of sales is less than the net sales, and therefore what do? We get the difference. At this point, we have the net sales and we also have the cost of sales. The difference will give us the gross profit, and now in order to balance the account, we'll have the gross profit just below the cost of sales. Gross profit carried down of how much you can have that amount. Then since they are now, the figures are share the same total, you double underscore, you double underline, to mean that now they have the same balancing figure. That's what we are talking about, the same balancing figure. That is not enough. You need to come and write the gross profit on the credit side below the totals. Gross profit brought down how much? Maybe that. And now this gross profit brought down, we are carrying it to the profit and loss account. Now this is basically how a trading account looks like, the format, and all this we discussed. I want you to note that net gross profit, this one you can note somewhere else, that is equal to net sales minus the cost of sales, the cost of sales. And this is what we have used there. In case we calculated the gross profit and we end with a negative, then it seems that the business made a loss. When we are calculating a gross profit and we are getting the negative sign to mean that the net sales is less than the cost of sales, then it is a loss. Let's have an example. The following information was extracted from the books of KK Traders. Opening stock 120,000, purchases 560,000, sales 40,000, purchases returns 30,000, carriage inwards 50,000, sales 920,000, and finally the closing stock 150,000. Required: prepare KK Traders trading account for the period ended 31st of August 2023. Now I'm going to guide you on doing this one. Now we start with the name of the business, Trade KK Traders. So we have it here, KK Traders. Then we are preparing trading account. So you come and write down there, trading account for the period ended 31st of August 2023. Now that is our title. Now we have the debit side and the credit side. And on the debit side, we said we are recording the cost of sales. So the cost of sales is given by the opening stock. How much is our opening stock? 120,000. We are adding purchases. How much is our purchases? Purchases is given by 560,000. Do we have purchases returns? Yes. Less purchases returns. Purchases returns. How much is the purchases returns? That is 30,000. And we said when we are subtracting, we enclose them into bracket to avoid confusion. Then do we have carriage inwards? Yes. Add carriage inwards. Carriage inwards of how much? 50,000. 50,000. Then finally, less closing stock. Less closing stock. And how much is the closing stock? 150,000. 150,000. Now, the 150,000 we are subtracting and we enclose it into brackets. Yes. Now, on the debit side, it's simply the cost of sales. I want you to look above here. We said cost of sales is equal to the opening stock plus the purchases less purchases returns plus the carriage inwards minus the closing stock. You can see all this is what we have recorded on the debit side. And if you work out all this, you will have 550,000, and that will be the cost of sales. The cost of sales, 550. Now we come to the credit side. We have sales as 880,000. we have sales returns. Sales returns, how much the sales returns? 40,000. Sorry, we have this sales as 920,000. That is the sales. Now the sales returns is 40,000, and we are subtracting the 40,000. So when we subtract the 40,000, we are going to have the credit side will be 880,000, and therefore this is the balancing figure which the account must balance with 880. Now, how much should we add to cost of sales to get 880? It will be 330. In other words, to get the difference between the cost of sales and the net sales. And that difference is the gross profit. The difference is 330,000. And therefore, this one is the gross profit. It's the gross profit carried down, 330,000. For it to balance, we come and write it. See, this is an account. Okay, after balancing, we need to underscore this line, underscore the totals to mean that they are now balancing. Then we bring down our gross profit. We have gross profit below the total on the debit, on the credit side, gross profit brought down of how much? 330,000. So in this case, we have the title, we have the cost of sales there, we have the net sales, and also the all this. So you can see you have made your entries so well, and that is our trading account. From there we can see the gross profit brought down. We are able to see all that. Now, if you are asked, what is the purpose of the trading account? Why is trading account drawn? Now, the trading account, the main aim is to determine the gross profit or the gross loss. That is number one. Number two, it enables one to determine the cost of sales. Like from there, we are able to see the cost of sales, 550. At the same time, trading account enables us to determine the net sales. On the credit side, we have the net sales. So you can just look at your account and see what is it that is there. On the debit side, I have the cost of sales. On the credit side, I have the net sales. And therefore, those are some of the things which you need to think about. You need not to master maybe a concept you are cramming. No, just look at the account. We are able also to determine our net sales, the net purchases, I mean. From the trading account, you are able to get the net purchases, because we said the net purchases is given by the purchases, this middle column here before. Yes, it is the purchases minus purchases returns plus carriage inwards. Then you will have the net purchases. So that one gives us the net purchases. Self-assessment. Now, having discussed that, are you able to try this one? Yes, you can. The following information was extracted from the books of Hariri Traders. The opening stock is given as 200,000, sales as 650,000, purchases as 350,000, purchases returns as 20,000, sales returns as 30,000, closing stock as 100,000. Then you are required prepare trading account for the period ended 25th June of 2023. Thank you so much for listening. I wish you well, and also to invite you to follow me in my next video of the profit and loss account. Thank you.